Welcome back. We're going to talk about, we're going to start into Chapter 4 in this session. Remember in Chapter 2 we did our unadjusted trial balance, and then in Chapter 3 we talked about adjusting entries and entered those, and we came up with our adjusted trial balance. What we're going to do in this session, in this chapter, is we're going to describe the flow of accounting information from the unadjusted trial balance into the adjusted trial balance and the financial statements. And then we will prepare our financial statements from the adjusted account balances. We will prepare closing entries, which is a process that we go through to make sure our books are ready for the new accounting period. We'll describe the accounting cycle, and then we will illustrate an accounting cycle for one period, and then explain what is meant by a fiscal year and a natural business year. And we've talked about those a little bit in earlier sections, but we'll go into it in a little more detail in this section. Okay, we're going to begin by describing the flow of accounting information from the unadjusted trial balance into the adjusted trial balance and financial statements. We can actually do this whole process with a 10-column accounting sheet or accounting spreadsheet. In the first two columns, we go into our ledger and we pull the unadjusted trial balance numbers from our ledger. We list all of our accounts like they're listed in our chart of accounts, which is our balance sheet accounts, assets first, and then our liabilities and our owner's equity and draw, and then our revenue account, and then all of our expense accounts. We list all those balances. We total up the debit column, total up the credit column, and cross our fingers and hope they balance. If they don't, we would have to go back into our books and determine where the error has been made. So we have to have our debits do have to equal our credits in this unadjusted trial balance column before we do anything else. Once we do that, then we go through and look at our accounts and see which ones need to be adjusted. So the first thing we do is list all of our balances from the ledger into our trial balance columns. And then we analyze each one of those accounts and determine which ones that have to have adjustments. And we make adjustments for two different reasons. We either adjust existing balances because they've changed, and those are called deferrals, or either we do accruals, which means we're making new entries basically because of unrecorded information. And then we take those adjustments and we either debit or credit the trial balance column and come up with our adjusted trial balance column. And once we've posted those adjusting entries to our ledger, this adjusted trial balance ledger amount should be what is shown in our ledger as of the end of the period. Then we have 4 additional columns, 2 for the income statement and 2 for the balance sheet. So we take all of our revenue and expense balances and transfer those into the income statement columns. And we take all of our assets, our liabilities, and our owner's equity and drawing balances and transfer those into the balance sheet columns. And so now we're going to take a look at exercise 4-1, which is on page 146. And this one, they ask us to look at these accounts and tell whether they're balance sheet accounts or income statement accounts. The first one's Amber Bablock drawing, and we know drawing account is an owner's equity account, so it would be in our balance sheet column. Utilities expense, all of our expenses are going to be in the income statement column, so we'd put the utilities expense in the income statement column, and it would be in the debit column, and our draw would be in the debit column of the balance sheet. Accumulated depreciation, remember we talked about depreciation is where we know that our physical assets such as our machinery and equipment, vehicles, and things of this nature, we know that they lose value as they age, and we use an expense account called depreciation expense to record that loss of value of those assets. And accumulated depreciation, we always leave the asset on the books at its historical cost. But accumulated depreciation is a contra asset account where we accumulate this write-off of that asset until we get a zero book value. If I paid $2,000 for a piece of equipment and I have $2,000 worth of accumulated depreciation, I would have a zero book value. So accumulated depreciation is a balance sheet account, and the asset, remember, is in the debit column. The accumulated depreciation account would be in the credit column of the balance sheet. Unearned rent is a liability, so it would go in the balance sheet column and it would be in the credit column. Fees earned, of course, fees earned, we know that's an income statement account, and it would be in our credit column. Accounts payable is another liability account, so it would be in the credit column of the balance sheet. Rent revenue is another revenue account, just like fees earned, so it would be in the income statement in the credit column. And then supplies, of course, is an asset, and it would be in the debit column of the balance sheet account. And this just shows the answers to those. Now we're going to talk about preparing our financial statements from the adjusted account balances. Once we made these adjustments, we're ready to prepare our income statement and our balance sheet. And remember, we always do the income statement first. The income statement is prepared directly from the income statement columns of that 10-column worksheet or from the adjusted trial balance columns of the spreadsheet. So you don't necessarily have to use that 10-column format, but it does make things simpler. But if we do it from the 10-column sheet, we do it from the income statement columns. And if we're doing it from just the adjusted trial balance columns, we do it from that. And this shows our income statement for Net Solutions for the 2 months ended December 31st, 2009. Remember, Net Solutions started up on November the 1st, so they had 2 months in their year. And so they're closing out at this time and doing their income statement for those 2 months. For the 2 months, he had 2 types of revenue, so we put them in the left-hand columns. He had fees earned and rent revenue. And we take those 2 numbers, we add them up, and then take that total revenue and put it in the right column. And then below that, we put expenses and a colon, and then list all of our expense accounts. And you can see these are indented a little bit from the revenues all the way to the left, and then our expenses are indented over a little bit to the right. We list those out and put those balances in the left column, and we total up his wages, supplies expense, rent expense, utilities expense, insurance expense, depreciation expense, and miscellaneous expense, and we come up with total expenses of $9,855. And when we subtract that from the revenues of $16,960, we see that Net Solutions had a net income of $7,105. And we know that that net income would be transferred to the statement of owner's equity, and that would be the next statement that we would compute. Let's take a look at another exercise, and again, this is on page 146. And this one, they tell us that the balance sheet columns at the end of the period for Dimple Consulting, the balance sheet column is $678,450, and the credit column is $599,750. So if our debit column on the 10-column worksheet, if our debit column, these last 4 columns don't balance when we initially do them, and it's off by either our net income or our net loss. So if our balance sheet columns, the debit column is greater than the credit column, that means we had a net income. So in this case, we can see that we did have a net income, and we would find out the amount by subtracting the $599,750 from the $678,450 debit balance, and we see that we had a net income of $78,700, and that's what we would report for our net income for the period. The first item presented on the statement of owner's equity, oh, I'm sorry, this is where we're supposed to stop. And I apologize for flipping to this new slide, but at this point we'll stop and we'll pick back up on this slide in our next session. Thank you, and have a great day.